All right, let's dive right in. Today, we're cracking open the playbook for what's got to be one of the most high-speed games out there, intraday option trading. We're looking at the market right now and projecting out to 2026. Because let's be real, the rules are changing fast, and this is your guide to making sure you stay ahead of the curve. You know, this quote just hits the nail on the head, doesn't it? The thrill, the adrenaline of day trading, that's not going anywhere. But the market itself, it's throwing some serious curveballs at us. And getting through this new environment, well, it takes more than just guts. It takes a solid plan. And that is exactly what we're going to deliver. We're going to break down a clear framework for you, covering strategy, the signals you need to be watching, and maybe most importantly, the discipline to actually put it all together. It's all about trading smarter, not just harder. Okay, let's get into it. First things first, we have to understand the field of play. And right now, the market is one heck of a volatile arena. Knowing where the pressure points are, that's your first line of defense.
23,000. This number, it's pretty much everything right now. The Nifty 50 has been hammering on this level, testing it again and again. It's a huge psychological line in the sand. Every time the market dips here, you can just feel the massive battle kicking off between the buyers trying to prop it up and the sellers trying to smash it down.
So what's driving all this tension? This number gives us a clue. This is the India VIX. You can think of it as the market's fear gauge. Now, a VIX at 21.6 isn't exactly code red full-blown panic, but what it is telling us is that the market is primed for wild, sharp swings. You know, the kind of moves that can wipe out your capital in minutes if you're on the wrong side of the trade. And a big piece of that underlying uncertainty? $100. The ongoing conflict in West Asia is keeping oil prices stubbornly stuck above $100 a barrel. And that just adds this whole other layer of geopolitical risk and inflation fear that keeps every single trader on edge every single day. Okay, so with all this chaos, it really comes down to knowing the boundaries. This table lays out the key levels that the pros are watching like hawks. For the Nifty, think of 23,000 as the floor and 23,500 as the ceiling. And you see a really similar picture for the Bank Nifty between 53,000 and 54,500. These are the lines where the really big, game-changing moves are born. And this quote perfectly sums up the mindset shift you have to make to win in this environment. It's no longer about guessing which way the market's going to go. You need a system. You need repeatable plays. You have to stop being a gambler and start being an executor of a clear, well-defined strategy. So on to the playbook itself. Let's break down 3 core strategies that professionals are using right now to find their way through this choppy market. First up, we've got a classic, the momentum breakout. The idea here is actually pretty simple. You wait for the market to go quiet, trading sideways in a tight little box for at least an hour. Think of it like a spring, coiling up energy. The moment the price breaks out of that box, either up or down, that's your trigger. But, and this is absolutely crucial, you have to confirm that breakout is for real with a big spike in trading volume. No volume, no trade. Next up, the gap and go. You've seen this happen. The market opens way higher or lower than where it closed yesterday, leaving a big gap on the chart. So let's say the Nifty gaps down hard at the open. A trader using this strategy would watch the low of that first 15-minute candle. If that price level holds and doesn't break, that could be the signal to jump in and play for a reversal, betting that the market's going to rally to go fill that gap. Okay, now for something a little more defensive. What if you want to generate some income, but you also want to put a hard cap on your potential losses? That's where the bull-put spread comes in. It's a hedged strategy, which is just a fancy way of saying it has protection built right in. So how does this thing actually work? Well, in a nutshell, you sell one put option to collect some cash. That's called the premium. Then you use a little bit of that cash to buy another put option, but further away from the current price. That second put option, that's your insurance policy. If the market goes up or even just stays flat, you get to pocket the leftover premium. And if the market completely crashes, well, your loss is capped. It's like trading with a seatbelt on. So, we have our strategies, we have the plays, but how do we know when it's the right time to pull the trigger? Well, now we're going to look at the tools for your trading dashboard, the technical indicators that give you the green light. Okay, first and foremost, you've got to know about VWAP. Just think of it as the market's true center of gravity for the day. It's an average price, sure, but it's weighted by volume, so it tells you where the big institutional money is really active. And the rule couldn't be simpler. If the price is trading above the VWAP line, the bulls are in control. If it's trading below it, the bears are running the show. And hey, don't just take my word for how important this is. It's often called the holy grail for intraday traders, and for good reason. When you combine this indicator with those key support and resistance levels we talked about earlier, you get a really, really powerful mount for the trading day. All right, next up is a more subtle signal, but man is it powerful. It's called RSI divergence. This is what happens when the price chart is telling you one thing, but your momentum indicator is telling you a completely different story. So imagine the price makes a brand new low, but at the same time, the RSI indicator makes a higher low. That little disagreement is a huge clue that the selling pressure is running out of steam, and a reversal might be right around the corner. And finally, the put-call ratio, or PCR. This is basically how you spy on the crowd and measure their sentiment. Here's the trick. When the ratio is super high, meaning tons and tons of people are buying puts and betting on a crash, that extreme level of fear often marks a bottom. The market is oversold. And on the flip side, when the ratio is crazy low and everyone's greedy, that often signals an overbought market that's due for a fall. Okay, listen up, because this next part is without a doubt the most important of all. You can have the best strategies, the best indicators in the world, but if you don't have discipline, they are completely worthless. These are the survival rules. This is what separates the pros from the gamblers. Rule number 1. This is the cardinal rule. It is absolutely non-negotiable. The 1% rule. It's simple. You never, ever risk more than 1% of your total trading capital on any single trade, period. This is what lets you survive a string of losses, which will happen, and still be in the game to fight another day. This is the key to longevity. Rule number 2 is all about fighting a demon that every trader faces, the urge to overtrade. You have to limit yourself to just 3 to 5 high-quality setups a day. That's it. This forces you to be patient, to be selective, and it stops you from revenge trading after a loss. It also saves you from getting eaten alive by brokerage fees and taxes. Remember, quality over quantity, always. And of course, you've got to play by the official rules of the road set by the regulator, SEBI. This is the boring but absolutely essential stuff. Peak margin just means you got to have the cash in your account up front, no exceptions, or you'll face penalties. The risk disclosures are there to remind you this is a tough game, and you have to know about position limits, which can put a stock in an F&O ban, restricting new trades if things get too speculative. So let's bring this all home. Let's talk about finding your winning edge. Because here's the secret. It's not some magic indicator. It's not one little trick. It's the disciplined combination of everything we just talked about. Solid market analysis, a proven strategy, smart timing, and ironclad risk management. So here it is, the bottom line. We've just walked you through the entire playbook. The strategies, the signals, the survival rules, they're all right here. But the ultimate edge, the thing that really makes the difference, isn't just knowing the plays. It's having the discipline to execute them flawlessly, day in and day out when the pressure is on. So the playbook is in your hands. The only real question left is, do you have the discipline to follow it?